What is investing? It's putting aside money into an asset to get more money back later on, based on what that asset will produce. Many people don't realize how significant of a shift in investing has occurred just over the last few decades with the rise of the internet. Now you can buy and sell stock online without paying any fees in most cases. Up until 1985, if you wanted to buy stock, you had to call a broker with whom you had an account and ask them to place a trade for you. And it was well into the 90s before online trading really started to take off. As a result, the percentage of ordinary Americans who owned stocks quadrupled in just a few decades. Today, online commission-free trading has become ubiquitous, and there's no excuse for not having an investment account. This, coupled with the plethora of information available in real time to investors, has actually had the effect of leading to measurably shorter pullbacks and bear markets in the stock market over the past few decades. I'm going to tell you the secret to wealth creation and preservation. The secret is live off interest, not the principal. I'll give you an example. If you had $1 million and you put it in the bank and you drew out $77,000 every year to live on it, in 13 years the money would be completely gone, zero balance. On the other hand, if you put that $1 million into the stock market and earned an average of 8% per year, which is the historical average, you could draw out $77,000 every year and you would never run out of money. When you die, there will still be $1 million in your account, compounding every day, year after year. This is the power of the stock market and the power of compound interest. Now, you're probably familiar with interest. If you take out a loan for a car or motorcycle, you pay interest to the lender in exchange for them loaning you the money. It's great for the bank because they make interest on their investment, which is their principal. It's great for whomever you bought the car or motorcycle from because they get a check and get rid of a vehicle in their inventory. But it's not great for you, the buyer, because now you have to pay interest to the lender for a vehicle that is only going to depreciate in value in most cases. Very few things that we typically take out a loan for actually increase in value. Homes are about the only exception. On the other hand, when you invest your money in assets that increase in value, you receive the interest. Now, it goes by different names such as capital gains or dividends, but the idea is the same. You get paid to trade your money for an asset. If you buy enough of the right assets, eventually you will be making money on your money. That's what compound interest means, earning interest on interest. It's been called the eighth wonder of the world. Here's how it works. You buy stock in a company like Microsoft. This is your, quote, principal investment. Every 3 months, Microsoft pays a dividend to everyone who owns shares of the company. Right now, that dividend is 62 cents per share. That's a little less than 1% annually, so it's a pretty low dividend yield. Let's say you own 100 shares. Every 3 months, Microsoft is going to pay you 62 cents a share, or $62. Now, you can take that dividend payment in cash, or better yet, reinvest it automatically to buy more shares of Microsoft stock. Now, $62 a quarter, or $248 a year, will only get you about 1 share of Microsoft, but you get the idea. Now, instead of owning 100 shares, you own 101 shares after 1 year. 3 months later, instead of getting paid 62 cents times 100 shares, you receive 62 times 101 shares. If you reinvest that money via a dividend reinvestment program, or DRIP, you will now own even more shares for which you get paid. And the good news is that many companies like Microsoft increase their dividend payments every year. In fact, just a few years ago, Microsoft dividend payment was only 51 cents a share. Now, Microsoft is a really strong, stable company that has been paying its steadily increasing dividend for decades. But there are hundreds of companies that pay a much higher dividend yield than Microsoft, especially right now. This all illustrates the concept of money making money. It's really powerful, and it's the not-so-secret secret of how the rich stay rich. They allow their money to grow over time, compounding itself many times over, and they live off a portion of the interest without ever reducing the principal. Now, it's not only dividend stocks that have this compounding effect. Really, when it comes down to it, you can classify stock investments into one of 3 categories. Dividend-paying stocks, which we've already talked about, growth stocks, which are typically technology companies or companies that are growing rapidly and they're not necessarily concerned with profitability. They're more focused on the technology or the product that they're offering, and they're trying to gain a large amount of customers in a short period of time, knowing that at a later time and place they'll focus on profitability. These are the companies like Google or Amazon or Apple back in the day where they grew rapidly, and a small investment made a long time ago would be worth a lot of money today. And then the third kind of stock is a value stock. So this would be something that's probably a little bit more stable. The pricing is not going to be as volatile as with a growth stock. They're going to be more focused on creating and retaining value. So their revenue should be steadily increasing. Maybe they're a holding company of sorts. Maybe they're buying new businesses all the time, but they're not going to have that parabolic growth that you're going to see with a growth stock, but it's going to be more consistent. Well, that wraps it up for this video, but there's more content to come, and I'll dive deeper into the different types of stocks you can buy, the different types of investing accounts that you might want to look at, and how to make sense of this whole thing called investing, and in particular stocks, although we will look at other investment types as well. So please like and subscribe and check back regularly for more content.